Welcome back, everyone, to another Stonk Market live stream. Well, boys and girls, we have yet another live day where now the Qs are breaking out. We're breaking out, boys and girls. We're breaking out of 627. This is what we've been waiting for since November 18th when Kevin said bye, said the catalysts are over, we're going up. We're going to the moon. We're going back to all-time highs. And now, with potential delays from Powie Wowie on the hawkishness, we's doing good. No, I mean, really here, this is, welcome. This is exciting. Obviously there's a lot of drama and excitement around the Netflix deal right now. We did a big analysis on it in the course member live stream. There's a lot to it, a lot of components to it, a little complicated. But I think broadly, markets here, yesterday, the Qs were like flat yesterday. And the problem with, I think, the Qs yesterday was the 10-year, because you are getting some of these jitters in the market because of this potential, wow, maybe we don't need lower rates, right? Now, I think we're almost certainly going to get the rate cut on December 10th. I wouldn't be surprised if we get a rate cut on Jan 28th, but we might get to a point soon here where the Fed tells us, look, man, we're at neutral. We're done. And I think that's what the 10-year is pricing for you. I think the 10-year is telling you, hey, we're like, how much more can we really go here? And it's just gone nowhere. Still at about 57 on the shock level over here, come down a little bit. And then also you're seeing the JPY come down. So if I go USD to JPY, you're seeing the JPY, the USD to JPY strengthen. So therefore, the JPY is coming down a little bit. Oh gosh, what am I saying? The JPY is going, oh, I hate that. I can always say it backwards. The Bank of Japan, I just promised they're going to raise rates. They may raise rates even more. That strengthens the JPY. What lowers is the ratio. What lowers is how many JPY you get in dollars. That can exacerbate some carry trade concerns. However, I think a lot of that carry trade concern already played out over the 3 weeks ending in November. So I'm not really concerned about this. I think it's a little overblown to be concerned about the carry trade right now. You've also got a major breakout on Adobe today. This is in a huge breakout, these lines here, because this is a massive intersection of a breakout for Adobe. So really incredible. Pretty exciting as well. Cody says, is iRobot playable? Tiny market cap. Well, let's go see. iRobot is a $145 million company. Yeah, sure. I mean, any kind of momentum plays like this, it always comes down to, frankly, trailing stops, right? Because you could get stopped out pretty dang fast. You could even see crashes in pre-market or post-market. So they're very sensitive and risky. But little plays like this, $140 million market cap, these things can run. It's usually pretty easy for these small companies to meme up to $1 billion. It doesn't last. Best case scenario for the company, they end up raising money. But, we got Ethereum steadily over 3K here. Bitcoin's not, holding on to that lower 90s too well. Still slipping. Already got this downtrend here. This is a 30-minute chart right here. So already got this downtrend. Not so great. AMD actually recovering today as well. A smidge here. I've got more Meta recovery. This is not surprising either. I think the sell-off there was quite overdone. Netflix will eventually rebound. SoFi's issuing shares. And let's go see what we've got. I mean, front page of everything right now is going to be Netflix. But we'll look at the second article. Let's see what we got out in the world. All right, so on the doomers, consumer sentiment rises for the first time in 5 months. That's great. We did see a beat on expectations there. The data this morning was decent, and nothing really shocking. Let's see here. Trump says Europe risks being wiped away unless it changes. Oh, Europe. Consumer spending stalled in September. Inflation line. I mean, this is such old data, though. Who cares? The man who got Eric into American Bitcoin before the 70% run. Is that Asian guy? Yeah. Mike Ho. Who? Ho. Who? Ho. Oh. No. Ho. Ho? No. Ho. Oh. That's like what's Abbott and Costello. Anyway, Eric Trump rang the NASDAQ bell to celebrate the windfall of American Bitcoin. Standing beside him, little-known Canadian who helped sell Trump on the venture over dinner at Mar-a-Lago, now serves as the company's CEO. Yeah, of course. His rise from a precocious Vancouver car dealer to the head of a NASDAQ-listed company underscores how Trump world became a fast route to riches during the crypto boom. Yeah. Okay. The slide of the shares was stunning. Basically, anything Trump-related has done quite poorly. Fundamentals are virtually unmatched, Trump said on X, while noting he was holding on to all his shares. It's going to be one of the best companies in the crypto space. Oops. Wow, what a surprise. The stock market punishes grift. Good. All right. So Musk got his EU fine. I thought it was lowered to 120. I thought it was a little lower than expected. I mean, this was widely anticipated at this point. Credit gauges spike. This isn't good. Wait, hold on. What is this exclusive? Those are energy profits. Okay. Where? Okay, let's see what this is. Wall Street races to cut its risk from AI's borrowing binge. Okay, so Wall Street is gearing up to lend massive amounts of money to the biggest players in artificial intelligence and simultaneously trying to figure out how to protect itself from any bubble that its financing may be helping to inflate. Urgency at banks to shed risk is visible all over credit markets, like Oracle CDSs. Right, let me look at those today. I feel like it should become almost a daily ritual for us to do a little fact check or gut market check on whatever we want to call it on CDSs. All right, here we go. So we're gonna go Oracle, CP, CDS, USDs. Let's go to the fives. Well, it's actually coming down. It was 128 3 days ago, 125 yesterday, and that's a 122. It's actually relaxing. So the reference to the CDSs in that article is actually old news. The hedging demand peaked for Oracle CDSs on December 2nd, which is actually kind of bullish. So if I go, let's see, Oracle CDSs, and we just make a note of that, bearishness, let's see here, bearishness peaked on CDS pricing, DEES2 at 128, fell to 126 yesterday, and now at 12246. So it's actually coming down. That's bullish, mind you. Bullish that maybe hedges are set and now relaxation can occur. Morgan Stanley has looked at using significant risk transfers. Mega offerings have helped push global bond issuance to more than 6.4 trillion in 25. Wow. Global bond issue. That's a lot. Hyperscalers, along with electric utilities and other firms, expect to expend $5 trillion as they race to build data centers, promising to revolutionize the economy. Sums are so large, they'll have to tap all major debt markets. Tech is impressive, but that doesn't mean you're going to profit from it. Goldman Sachs, pause on Cirrus. Banks are turning to credit derivatives. CDS is ballooned. Banks are providing massive construction loans for data centers. Ah, interesting. Banks are not only providing loans to buy chips and develop AI, but also, quote, massive construction loans. Now, those could be big bags. Those could be very big bags in the long term, which is likely driving the Oracle hedging. That makes sense. Hence, Oracle hedging per Bloom. Okay. That makes sense. Swap costs. Blah, blah, blah. AAA. I'm tired of hearing AAA crap. Blah, 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 blah. Complicated bonds. I mean, a lot of this we've heard of before. Banks are fully aware of the market's recent concerns with overinvestment and overvaluation. It should shock no one that they may be exploring hedging, of course. Banks are looking to create products that allow them to offload the credit risk. Adding to urgency the massive size of the latest debt offerings. Multi-trillion-dollar market cap companies and funding needs. Meta was drive-by financing. Yeah, more to come, basically. All right, so I mean that's no big deal. Nobody cares about that. All right, whatever. What do we have over here? Recent takeover of utilities by BlackRock, Blackstone, drawing scrutiny from Dems. Taking advantage of regulators. Warren's losing her crap. Yeah, I don't know about that because I feel like a lot of these companies, while they're making investments into utilities, those investments are also enabling the utilities to build out more of a power grid, which is exactly what you need. So it doesn't surprise me that Warren doesn't understand the free market. Really doesn't shock me at all. All right, so let's see here. Trump aims at Europe. Elon Musk's lack of imagination. Well, that's not something I've heard somebody say before. The great entitlement state grift. Okay. So, Japanese billionaire plans network of Trump industrial parks. China's answer to NVIDIA soars 425%. More threads founded by a former NVIDIA executive surged to over $1 billion valuation. Okay. All right. Anything juicy in the FT? Oh, and then information we got to check there too. They got the AI juice. I love looking at the AI juice. Nothing super exciting. Yeah, that's the Chinese channel. Okay, that's fine. That's the same thing we saw over there. Takeover. Okay, let's go to the info. Why Silicon Valley is buzzing about the CEO succession for Apple? Well, because maybe somebody could actually make Siri not suck. Wouldn't that be great? New York Times sues Perplexity. That would be my guess. Apple, board of directors, post-cook future, guessing game, Polymarket is guessing, blah, blah, blah. Outcome could determine whether they could be a successful comeback. I mean, the stock's done fine. I'm pretty sure it's like knocking on the door of all-time highs, but it's clear Tim Cook hasn't moved fast enough on AI. Of course, okay, yeah, it's all about AI. All right, well, that's not a surprise. Okay, so how AI is rewiring childhood. We'll look at that in a bit. Where's that Elon article? And then how are we doing continuously right now? The breakout continues. So we're holding above 627, which is great. We had a brief little pause, but not long. This is the 1 minute chart. So what, we had like a 7-minute hold at the line. It's not bad. And then, wow, Netflix went green.
Gained the lead.
Nice. Go Netflix. Maybe the downtrend could finally be over. Bond deals, Palantir. Palantir back to 180. Bitcoin still sitting at 91.3. MP Materials 63. Has Sim found a floor yet? Sim, not yet. That's stabilizing around 59, but that's not near a line, so I'm a little cautious on it. All right, what do we got? We've got Elon's lack of imagination. Chicago's Cook County is heavily indebted. Too many people drawing benefits, too few workers. County's accumulated unfunded pension liabilities. What does this have to do with Elon? BLS. As for Mr. Musk, it's not every day this column can fault him for a lack of imagination. Right. The problem America faces today is a lack of work incentives exacerbated by government programs. Nearly 7 million prime-age men are neither working or looking for work these days. Today, for every prime-age man who's actually unemployed, out of a job but looking, 3 are neither working nor looking for work. Wow. Still don't know what that has to do with Elon. Yeah, I don't really understand. I don't know that I care to understand. Sounds dumb. All right. There's the 120 million euro. Oh, that's right. That was reduced from 140 million euros. Okay, which translates to 140 million dollars. Okay. Oh yeah, how is Etsy and like Pins doing these days? Let's take a peek here. Etsy. So Etsy, little bit of a recovery on the day, but otherwise, if you actually zoom out, there's nothing, no recovery in sight. A little bit. Can I almost line this up over here? Let's see what I got. Here, yeah? No, it's not great. Go throw that in here as a gray just to keep some perspective on it. Let's go check Pins as well. Pins, baby, Pins! Yeah, it's gone nowhere. The consumer. So how about the Best Buys? The best of the buys. Best Buy, although Pins did bounce on the line. Best Buy kind of also has that very similar Etsy style trend line. Very similar to Etsy right here. What's their dividend yield right now? They're yielding 5% on Best Buy. Are you kidding me, dude? Best Buy's paying 5%? Can they even sustain that dividend? Does anybody know? Best Buy, investor relations. We already talked about PC. Stop spamming, bro. What's there to talk about? Talked about it this morning in the course live when the data came out. It was along expectations, which I mentioned when I started this live. There's nothing to talk about. I think incomes actually came in a smidge higher, but there's nothing there. All right, let's go look at the filings on Best Buy. So Best Buy, what's wild is a 5% dividend. The problem is all these consumer companies, they're paying this, like even Target. And I just wonder if these guys can actually sustain this. Okay, selling TVs isn't the way to go. Best Buy, it's such a low margin business. Rather than Netflix margins. 10Q, 12, 5, 25. All right, let's see what we have here. So assets, revs. Well, let's go look at cash flow quickly. Quick look at cash flow at Best Buy. I have $783 million in 6 months. About half of that goes to plant, property, and equipment. So I've got about 440 mil over here. 440 mil. Okay, and then if I go look at what they're doing with it, they're paying there's their dividend and repurchase. Okay, so their cash flow is basically getting paid out. What's their debt situation? Debt sits at current liabilities 8.5, some gift cards and deferreds, call it 7.5, long-term debt of 1. So 7.5 plus 1 is about 8.5. Roughly what they have in inventories and cash and receivables. So they're actually pretty decently capitalized. So Best Buy, decent cash flow, assets to pay dividends. Their operating income fell because of restructuring, but revenue was actually slightly growing. So there's like an interesting stability here. Now, what's this puppy in terms of margins? Slight decline in margins probably because of tariffs. Let's go look at what the forecasts are from Wall Street on this puppy. Stock. Best Buy, Best Buy, Best Buy, Best Buy. Okay. So, the forecast for Best Buy, I mean, the 5% dividend's always juicy. Okay, so Best Buy has, oops, put that over here. Best Buy analysis. Okay, we're looking at forecast Jan 2026 EPS of $6.32. I mean, what's there to look at for Bitmine inversion? Like, you know, it's nice of you to donate 10 pounds. I don't know what there is to donate. It's all predicated on underlying risk pricing for Ethereum. You know, I mean, risk assets should be bullish between now and I actually think we might be able to get through this Fed meeting because I think they'll punt their hawkishness to January. So, but I mean, you can buy Ethereum yourself, and then you don't have to pay for the leveraged exposure and the fees that you're paying at you know, to Tom Lee and his cronies. I think it'll all end poorly, like MicroStrategy. I'd rather buy, if I actually cared about Ethereum, I would just buy the underlying asset. I wouldn't buy a leverage fund. I'd do my own leverage. All right, I got 8.3 forecast of growth, 8.39% 4-year forecast for growth, which that puts my PE ratio right now 73.37 divided by 6.32. They're trading for 11.6x PE. Wow. And if I divide that by 8.39, trading for a 1.38 peg. I mean, it's not like the cheapest in the way of, you know, it's a high expense consumer play, so it's not going to be worth anywhere near what a service play is worth. But the consumer plays are kind of cheap. Okay, so EPS 6.32, the growth. Throw in 9 for a moment. Throw them in. All right. So I think their dividend's sustainable. Just like Target. I mean, Target's a dividend aristocrat. They don't want to get rid of that. That would just tank their stock. So they're unlikely to lose their dividend like Target. But for a quick little like 3-minute analysis, yeah, 129, 1.3-ish on the KPEG. That's not bad. Not bad, honestly. Okay, good. So what else? Qs. We're kind of slipping back to 127 here. Pretty important line. And how's Amazon doing these days? It's at, there it is, 230. So I feel like we've been range bound at Amazon forever. What's Amazon's peg doing? Like the valuation of Amazon. That'd be nice to know. It is, you're trading for a 1.8 peg right now on Amazon. On the KPEG basis. I price in a little bit more growth. I like them as an advertising play as well. You know, Netflix, Amazon. These are great advertising plays. Okay. What else? So, Hood, we got 3s. All right, let's go see if there's anything entertaining. Yes. Let's go find out. So, I will go take a peek. Bitcoin just lost 91. Let's go jump into the Doomers and just see if they have anything decent here. All right. So, scenes from Putin's visit with Modi. Nobody cares. Can the U.S. reach a trade deal with Canada? Nobody cares. Burgum. Cutting red tape. Fine. Okay. Dan Ives chilling AI. Well, nothing's changed there. That is not news. I asked for news. Well, there's nothing there. How interesting. Quiet day. Good, at expectations on essentially on PCE and Mish. I've got, is this thing gonna work? Turn these puppies on. Let's try it again. Okay. People are critical of the Netflix deal because they don't think the White House will go for it, or they'll have to bend the knee to Trump. Okay. Old news. Let's go see what the institutions got for us today. Let's do that. So let's jump into there. See if they have anything good. So, today's already December 5th. Wow. Jeez, man. I thought December just started, and I feel like we're already a week into December, actually. You got to get your Christmas lights up if you haven't gotten them up yet. I got my candy canes up. Hope you got your candy canes up. All right. JP Morgan. So, would I be a buyer of Ethereum here? Well, I don't buy Ethereum or Bitcoin, but I think you have risk on momentum. As we've been saying since November 18th, risk on through Powell. So here's Powell's presser. Again, my anticipation is they can postpone hawking to Jan 28, given jobs data D16 plus CPI plus jobs again early Jan. So I mean, if you think about it, they're going to have two reports coming up. Let me get the CPI schedule of releases and BLS jobs schedule of releases. So I get Jan 13th. Okay. So Jan 13th, like think about these dates here. Let's put this down. So D10 Fed, D16 jobs November, Jan 13 D's CPI, and then I think it's Jan 6 D's jobs. J6. He said J6. I don't know if that's actually the correct date. Based on me saying that now, I don't actually think that's right. But I'm about to find out. So, on the 18th, we get the CPI, and then 9th. Okay. 9th. And then 18th. Okay. D's 18, CPI November. So, like, that's a lot of data right after the Fed. So, Fed D's 10 relies on ADP, which is volatile. Okay. Fed Jan 28 gets 2 of each reports from government. And it's been a while since we've had reports, right? We have no October. Like, October's deleted. So, to me, that's actually bullish because you can potentially wait for the true hawking. True hawking and real pause may come Jan 28. Yeah, let's see, they didn't. What else do we have here? Supreme Court, Lisa Cook, who cares? Nobody cares. Okay, USMCA, fine. Inventories, blah, blah, blah. Yeah, but that would be my outlook here for what matters on this chart. Okay, let's yeet that up there so we have it. We're gonna yeet it. Pop that over here. Okay. Oh, somebody's asking about the member list. Yeah, just watch lecture 1.0 in any course that you're in. The very, very first thing, and then you'll be able to join. Yeah, we had a smashing play this week. We did this fundamental analysis on a stock, I think it was Monday, and then and we were really excited about it. And then they reported earnings, and it was up like 25% after earnings. And I'm like, I'm glad I made money, but like I kind of want to buy more of it because they confirmed what we were looking for. Like, we did our fundamental analysis. We're like, these people are leaving a lot of bullish hints, right? So in the earnings call, they were leaving hint, 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 hint. And then we were corresponding that to what we were seeing on the numbers. Pricing power expanding with their bullish hints. I made a big buy on them. They rocketed 25% after earnings. And now I'm like, going into the earnings, I'm like, but there is one thing I want my answer on that could be a cause for concern. That was not a cause for concern, thank goodness, because they specifically addressed that concern. And now they're still green. And I'm like, like I want to own more. That's always the struggle, though. You know, you buy something and it goes down and it's like, oh, I should have waited. Or then you buy something and then it goes up and it's like, damn, I should have bought more. I mean, I almost got like 100K in the stock now, so it's fine. Actually, it probably is right there now. But yeah, I mean, that's the kind of stuff we do on a fundamental basis in the Alpha Report every morning. So if you're not part of that yet, you know, meetkevin.com. Okay, so thanks, man, for everything you do. I'm a Meet Kevin member, but couldn't make live stream. Could you do fundies on Ferguson Enterprises? They have earnings Tuesday. Ferguson? And somebody says, I'm up 200% on silver. Silver! Yeah, I think metals, you know, are almost like a fear hedge to some extent, and an inflation hedge. But I'm not the biggest believer that we're going to have inflation. I think if we keep having jobs weakness, like the ADP weakness, you could keep seeing the gold and silver movement run. But if we soft land, those will deflate. So I almost think there's some level to be cautious. Ferguson. Dude, I don't know anything about Ferguson. Who the hell's Ferguson? This is a $48 billion company at like all-time highs. All-time highs. $48 billion enterprise. I don't even know who the hell they are. Ferguson Investor Relations. I don't know what they do. I don't know that I really care. Who's Ferguson? I don't know. They did a Q4 here, so ooh, that should give me an annual report though. SEC filings, annual, 10K in September. I thought you said they just reported, or no, their report comes up. Oh, okay, so their last reading was really an annual 10K. Ferguson Enterprises. Ferguson, I'm not gonna spend a lot of time on this. 10K. 12.5. 12.5. Nobody knows the 5th of December quite like I do. Well, so what is this? This is the largest value add distributor serving the water and air specialized professional. The fuck? Serving the water and air specialized professional? What's a water and air specialized professional? Plumbing and HVAC? In our $340 billion residential and non-residential construction business. Oh. Oh. We help make our customers complex customer. Plumbing and HVAC crap. Huh. So they're a distributor. Buffett likes plays like this, especially pool. Maybe refinance boom bet, right? Okay. Now that's interesting. Canada contributed 5%. Wow. Canada. Okay. So, well, let's go see what their financials are. Wait, what's over here? Okay, yeah, these are just some miscellaneous financials. I want their full stack, baby. Here we go. Net cash used in financing. I have stock buybacks. I have dividends, and then that's a refinance right here. Mechanical engineering, plumbing, and HVAC company in South Florida, and we got crushed over the summer. Sorry to hear that. So then I've got net cash provided by operating activity. I got a good cash flow here, honestly. That's for the year. The whole year, I got 1.6 billion bucks. Okay, so they make money as a distributor, dude. $1.6 billion as a distribution company? My lord. Current debt. Yeah, payables. Okay, 6 bill. Most of that is in inventories here, but they also have receivables. Their receivables and inventories are actually pretty decent, so I should have plenty of money. Actually, the balance sheet's not bad for a distributor. Decent balance sheet, just at a glance here. And then net sales, wow. It's a lot of SG&A. That just went up 5%. I got some depreciation here. Okay. I mean, this company continuously makes money. You had a little bit of a lull there in 2024, but I get it. You know, you've got consistent distribution of cash, and they're paying some dividends. Let's go look here. So expected EPS at this company, this is a $250 stock. They're expecting for the summer of next year 1082. They're selling for 23 times. It's a little expensive. Yeah, because their growth is expected to be 11.8. So you're trading for what, 1.889-ish peg? It's kind of like a high expense manufacturer. I mean, they're not a manufacturer, they're a distributor, but they have the employee base and the low net income, right? So their net income as a percentage of revenue is 1.856 divided by 37.62. Yeah, I make 6%. high expense business, cyclical business, IMO fully priced, balance sheet is fine for distributor, but there's no bargain here. Like, so if you look at it, it's like balance sheet is okay, no pricing power, that's bad, right? This is obviously okay. Momentum has been up, which is bad, and fundamentals, fully priced, which is also, bad, no discount. So, like, when I look at buying something, I want all four of these to be in my favor. I want a great balance sheet. I want big PP. Everybody wants big PP, but I especially want big PP. Momentum up, which is bad. I want the momentum to be down because I like buying when momentum is down. And then I want, a discount to fundamentals. So I'm not saying it's a bad business. I'm just saying it's not the most desirable place for me to go shopping for this. I guess you could have just looked at the chart and known that too. But anyway, so yeah. Somebody says thank you. He's gonna buy puts. Wow, I'm not advocating shorting. I'm just saying, like, there's a difference between saying I don't want to buy it and shorting. It's like Simon Property Group, Like, I think this is the R word. That this is at all-time highs, basically. The malls. Freaking malls, dude. I want to short the crap out of this. If you go into a recession, Simon Property Group, I mean, they probably won't go bankrupt, but you may as well go bankrupt. But I'm not going to time that bet. No thanks. So, all right. So what else is going on here? Sims still can't find stability. But that's because of the share raise, which is also what SoFi's doing. SoFi, Open Door, I'm very bearish on. Open Door is going to continue bleeding out, in my opinion. Don't buy. Terrible time to buy Open Door, in my opinion. Not personalized advice. SoFi, and this is how SoFi makes money, by selling shares. So, which makes sense. I mean, that's what banks do. It works in an up market, especially with momentum. It collapses in a down market very, very rapidly. More so than other plays. Like, the downside is much higher than on other plays, which is not ideal. So, all right. What else we got here? Why do I have so many notifications? What's going on? Oh, holy smokes, dude. All the bond payments go out. Like, the old days of, like, Greg Cardone holding up the rent checks, be like, I'm sending out the rent checks, boys and girls. I'm like, man, what a loser way to do it. We got ACHs direct depositing, and I get a notification for each one. I'll just read them in a row. I have no idea what they're going to be. Payment sent, 166, 125, 1250, 208, 116, 208, 104, 125, 166, 250, 833. What's that good? That's a nice dividend. 125, 166, 166, 166, 125, 166, 166, 125, 166, 125, 208, 833, 416, 125, 250, 1500, 166, 125, 125, 104, 1250. Keeps going. There's another 416, blah, 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 blah. It's all money. Straight distribution. That's on the 5%. We pay it every month. The 5% yield for the people investing in the house hack convertible round. All right, so what's going on with the Qs? Why are we not holding 127? Yeah, we did an analysis on SMX the other day. It's memeing, but I'm not going to do that again right now. All right, so okay, there's nothing here. The institutions, I mean, we looked at JPM's piece. Rates, liquidity. I think the JPY fears are overblown. We could do bull bear scale. Soft landing and wall of worry for 26. That could be interesting. Very soft landing and hard choices. Okay. Well, before I read that, let's go make a note here on just bull bear notes. So, you know, my assessment right now, bullish, call DECE 8, November 18 through DECE 9, which I think expands due to weaker ADP we just had on Wednesday. I think Powell delays hawking until Jan 28. See below calendar of CPI jobs reports, which increases risk sentiment between now and Jan 28, my B day. Okay? So basically, like, that's bullish, right? So bullish, you know, we've been bullish since the 18th. It creates about 2 months of bullishness. Creates about 2 months of potential bullishness. If we then Canada and get back to job growth, we stick the soft landing, right? We stick the soft landing, bullish AI profiteers, okay? So what's what's an AI profiteer? AI profiteer is not an LLM or chip play anymore, or utility, or data center. IMO, the AI profiteers, are the surviving servicers and aggregators of business value and, you know, net worth boosts for people. You know, mostly house hack on that one. A little biased. A bit biased on that last one. but it, you know, that's what I think is the next phase. And then also, and advertisers who reap the benefits of LLMs and chips, data plays, you know, server rack companies, component companies, advertising to keep growth up. Like, imagine how much money NVIDIA could spend advertising. If, you know, they don't need to right now, but if they were going to. So that's my take. Now, if I go to the soft land, what is this here? I do want to say eventually, okay, now there are risks. I'm going to put this note here. The risks right now are the same. Risks right now include Sam Altman F up. Okay? Sam Altman screwing up would be very, very bad. Sam Altman / GPT failing is very bad. It removes 1.4 trillion in commitments that people like Lisa Su, CEO of AMD, utilize to promote year-over-year growth thanks to Q3 OpenAI sales 2026, which are likely funded by NVIDIA Q2 26 investment into OpenAI following 1 gigawatt hour deployment and successive deployments. So basically, if Altman disappears, like the murdered, I'll put quotes around that, or I should say suicided SF engineer, then a huge support for chips, data centers blows out, and Burry ends up being right on depreciation, which he will be in the long term. So really, as long as Altman keeps getting money, we should be good for soft landing, right? Okay. All right. Now, what's that macro piece? Macro. All right. So, very soft landing, hard choices. Investors are trying to worry more about 2026. Focused on everything that could go wrong. Convergence of macro and micro fragility. Fragility. You know, say hi to Sarah. All right. Investors are starting to worry more about 2021. Fine. Remains highly exposed to capital-intensive AI build-outs, digital asset-linked treasury risks. Those need to implode. Bottom comes when those implode. Like the, you know, Bitmine and Sailor need to implode to create a true bottom in digital assets. As you know, I will say, they're like, take this with a grain of salt though. You know, maybe I'm salty because I have to deal with tenants, toilets, renovations, contractors, leasing, you know, water heaters, and bullshit. And they don't. But I won't change. Right? So just keep that in mind. I won't change. I do love houses a lot. And I think I'm providing actual value. So maybe, you know, there's sort of like, so maybe that's a moral bias, right? Like this sort of like moral high ground bias of like, hey, we're actually providing value by giving people homes. Whereas, you know, these funds are really a way, the Sailor strategy is a way to enrich the executives of those companies by really doing nothing that you couldn't do yourself with no effort. Like, why does, like, it's always famous, like, why does Michael Saylor need, you know, ask yourself, why does strategy need a $100 million jet aircraft? You're like, what are they going to go do? They're going to go check, like, their Bitcoin vaults for a digital asset? Like, it's retarded, right? But whatever. Okay, enough about that. So we know that. We know it's a Ponzi. So for risk managers, the environment argues for early portfolio inoculation rather than reactive hedging. Maintaining a disciplined exposure. That's fine. Reinforcing liquidity. Yeah, you want cash. I agree with that. And increasing the use of some hedges. The path to 2026 may validate the soft landing, but the distribution outcomes are widening. Protecting against left tail scenarios will be as important as harvesting right tail momentum. Okay, this is basically saying protect against recession while allocating. Okay, so this is low debt, margin, payoff, you know, etc. Right? So saying, Kevin, you had well, yeah. But we actually have assets in different states that we have to work on, right? So it's very different. Like if Michael Saylor had real estate in, you know, 10 different states and he actually had to go look at his properties and negotiate deals and meet people, then it would make sense, right? But he doesn't. That's the point. Like, you don't even have an excuse. Consensus for 26, equity performance continues to be upbeat. EPS is seen up 10 to 15%. S&P targets centered around 7,500 with less dispersion than at 25. No real movement in CPI. GDP back to 1.8. Macro investors are being guided by soft landing. Right. The soft landing is almost like pricing in. Soft landing is you know, really what's being priced in. Like, there's no recession pricing in markets right now. We know that. Okay. Oh, Bitcoin just dumped under 89. Or sorry, under 90. What happened? Yo, what the hell, dog? Oh, man.
Lost the lead.
What's going on? Well, here we are trying to talk about 627. We couldn't even keep it up, homie. What the hell? Nvidia down 1%. The hell's going on? Where the Bitcoin? Where the Bitcoin at? Yahoo sold. Honey, they rugged us again. They said that Donald Trump said that crypto, we're going to be the crypto capital of the world, honey. Donnie can't be right. We voted for him. We voted for him 3 times, honey. Trump can't be wrong. Let's go buy the dip on Alt 5. That loser Kevin says it's going to 0 though, honey. But he's just a gay bear. Dude, Alt 5's at 144. It's gonna go bankrupt. I'm very convinced this is going to go bankrupt. Okay. Whatever, man. Just got coffee in my eyeball. All right. Cliff Island, Maine? Where the hell is that? Cliff Island, Maine. The Japanese carry trade is kind of already priced in. Dude, there's no way you live on Cliff Island. Is it? Cliff Island is an island in Casco Bay, Maine. The island had a population of 60 people. Bro, there's no way you're one of these 60 people. Really? Cliff Island, Maine. This looks awesome. I want to go. Look at this. Look how peaceful this looks. Cliff Island. A ferry, a dock. This is beautiful. A rusty bucket. Cliff Island. Wow. That's cute. That's really cool. I never heard of that. All right. So anyway, where were we? Pump and dump action. So no, I mean, silver and gold go in momentum cycles, you know, and the ETFification of these is just going to add to the momentum cycles of those. But yeah, I think there's a huge cyclical nature to it, so I always recommend being cautious when things are at highs. I don't like buying when things are at highs. All right, increased debt to fund AI investments, hyperscaler-linked CapEx boom increasingly funded by debt. Well, that's definitely a risk factor. Raising sensitivity for high borrowing costs and margin compression, PE for mega caps. Sustainability is a central risk. Oh, honestly, Sam Altman is the central risk here. Is the central risk. Because he, you know, he set up the earnings guidance for mega caps like Nvidia, AMD, right? The church on Cliff Island is for sale. No, I don't rent to church. I don't rent to churches because I'm not going to evict God. I'm not doing it. If God ain't paying me rent, I am not going to evict him. And I got to do what's right for shareholders. And so I won't buy a church. Hyperscale free cash flow, CapEx issuance, CapEx / debt issuance, free cash flow. Okay, whatever. To fund investments, to have free cash flow. We included Oracle. Demand to buy new chips. Forward PE is high. Should margins decrease or the cost of borrowing rise, the AI boom would slow. This will hit GDP and may trigger reactions from the Fed. Well, that would be good for mortgage plays. AI bubble concerns. all relate to whether investments can be sustained. Right. Now I'm gonna go invest some more money in House Hack. I'm gonna actually do that. Get my transfer set up. I want to do it before the end of the year. Does Bitcoin below 75K matter to the stock market? Well, this would be a risk red flag, right? Risk warning sign. Somebody says, what happened to Sim? They raised money, and they're selling a lot of stock to do that. And they also, going above 64 was ridiculous. Sharp position, unwinded Bitcoin, exposed growing fragility for firms with digital assets, liquidity, electricity demand, AI infrastructure, earnings with significant Bitcoin on balance sheets. Well, unfortunately, remember that at Bitcoin, we did this analysis, Bitcoin 85,000 creates some real losses for these companies. You know, I'll make a note here that this one potentially as high as 5.9 billion based on other analysis. Yeah. Kind of wild. And so remember that Gap financials now, the way accounting is done now, you essentially have to account for the fluctuations of Bitcoin prices. So, wow, dude, holy smokes. We're almost at $500,000 of investments in the first 5 days of December. That's really good because our average 3-month trend is $1.3 million a month. November, we were almost at 2 million. And now we're essentially at $500,000, a little below $500,000 for the first 5 days of December. That's pretty damn good. I'll put it to great use. You know, yesterday, I'll show you great use. Here, let me pull up my Bitcoin ledger. I'm just kidding. Okay. Y'all know the Hillary Clinton meme where Hillary Clinton's looking at the kitchen of like a normal house and people are like, she's got that face like, what the fuck? Like, this is how you live, right? It's like that kind of face where like somebody gives you a gift but you don't really want it. And like you don't really know what to say. So the Hillary Clinton meme is this. Yeah. Here she is in the kitchen, right? That's the Hillary Clinton meme during the 2026 presidential campaign, going to a working class home, and her face is like, what? Right? That was classic. Okay, you ready for that? Okay, this is where the dollars go. Hold on. All right. So this is Summer. And if you look at her face, it's basically the Hillary Clinton face. Because I'm like, Summer, isn't this great? Should Daddy buy this? Ready for this? Look, Summer. It's just nasty. Oh man. Oh man. If you didn't see it, because Elon doesn't promote my tweets, look at this. This was from yesterday. You'll hear the real juice if you listen closely, okay, if you listen really closely, you could hear the money in this deal, like money going into like a gaming machine, and I'm winning in the casino. Listen closely and you'll hear the casino paying me. Watch this. Nice.
Gross. Gross.
Did you hear it? It sounds like we're rattling the coin machine. It's like the perfect analogy. That was a sink, by the way. That, in case you haven't seen a rusted through sink, I was able to put my finger through the sink. You ever do that one before? Somebody says, make sure she's not exposed to mold. I actually, I make it a goal to expose them to lead, asbestos, mold, you know, everything. So I could make them really resilient real estate investors. You know, asbestos, you know, it's great. No. You gotta take care of the little kiddos. But anyway, yeah, Q's lost that 127 line. Yeah, let that sink in. Okay, that's a good one. That's a good one. Yeah, you know, I think a little bit of paint in that sink will be fine. I think I just spray paint it and we'll be good to go. All right, so where were we? You know, get some radon in there. Yeah, exactly. Yeah, I love what we do. Somebody's like, yeah, so it's not, it's a yield and the bond is what it is. It's not a dividend. Let me just quickly explain it. So if you go to househack.com or reinvest.co, it's the same company. The first thing you find is the invest in our AI software, which, you know, we launched this month. And it explains all of our AI software. That's the AI play of the business and the upside or whatever. But if you click on invest, you could go right here and you could invest and get that exposure to real estate without the tenants and toilets and the headache. So you diversify to real estate and the real estate software. You get 5% yield through the conversion of the bond, and you only convert if the stock goes up in value. And we pay out the yield monthly. And it's open to non-accredited investors. Just make sure to read the offering circular. There's risk with every investment. You know all that. Yeah, some people. Yeah, technically you can invest with credit card, ACH, or wire, and there are no fees. Obviously, we prefer if you just ACH money. Okay, anyway. So not a solicitation, read the documents. So where were we on this? So if I go here, companies with significant Bitcoin balance sheet. So we talked about this risk. The correlation of Bitcoin to tech shares was positive until November. Downside move in Bitcoin correlated with the de-risking in equities. The negative correlation stands out and suggests that other factors such as liquidity and Fed policy matter more to Bitcoin than hyperscalers' AI investment. The negative correlation stands out matter more to Bitcoin, liquidity and Fed policy. Yeah, the Fed's still driving the ship here. And a hawkish pause, Jan 28, is probably a risk factor. Okay. Kevin, I need to take out a HELOC to invest in house hack. I don't like taking out debt to invest, okay? So I just want to be clear about that. It's like you have to make your own personal decisions. But what I would love to, honestly, if we soft land, you know what I would really like to do? And tell me what you think about this. Tell me if you think this is a good idea, okay? We'll run. I'll run a poll on it, okay? You got to vote on this, but tell me if this is a good idea. So, okay, hold on. Let's go to poll, insert ad. No, I don't want to do that. Engage with your audience. Start a poll. Is that a good idea for house hack? Yes. No. All right, ready? So the idea is, this HELOC person made me think of it. The idea is, the app, our AI app does AI valuation based on Kevin's training and the actual condition of the property. Then, you know, in the long term, the app suggests, hey, want to do the renovation? Swipe up and secure a HELOC for your reno, like basically instantly, or, you know, as quickly as possible, right? So then it becomes basically a lender, you know, but it's sort of like SoFi, but instead of personal loans, it's real estate secured renovation debt, you know, so people are actually renovating the property that is the underlying security instrument, right? So anyway, that's a really long out idea. It's not really on the radar right now, but there, I'll run a poll on it. So I said, is that a good idea? Yes or no? You could tell me. I don't know. I think it's really interesting because I think there's some cool things to do. And obviously secure it, right? So you do like a virtual notary or something like that, but something all through the app, just really seamless. Like, cool, man. You upload pictures or a scan or whatever the property, the AI gets your analysis done. Boom, here's your loan. And it's just like easy. So I think that's interesting. Okay, so the share of USD valuation is linked common ground. A weaker USD helps Mag 7. Weaker USD helps the Mag 7. What makes HouseHack different than a REIT? Well, HouseHack's not a REIT. HouseHack is a real estate company that also has software. Like we're an AI play as well. Our AI is already positive ROI. So you have to think about that. Like, you know, the money that we spent on R&D for our app, we have already made back by selling our AI service, which is incredible. So that's a huge difference right there. And then you're not paying a lot of the fees that the REITs are paying. I mean, look at some of the SG&A expenses on the REITs. It's insane in my opinion. But anyway, yeah, no, HouseHack's a corporation that's not a REIT filing. Okay, so the investments in AI and data centers needed to compete for dominance have left two assets interlinked. The political risks may rise and electricity affordability become a key issue for 26. Together, they make for exponential volatility ahead. Well, yeah, the election, sure. I'm not so worried about that. I mean, Republicans will lose in midterms. Okay. Key level for Bitcoin is around 75,000. And then you stop minting new supply at 50 because of the cost. Sharp position unwind in Bitcoin exposed growing fragility for firms using digital assets for treasuries. Macro liquidity linkage. Yeah, the minimum is 20K. Electricity demand. Okay. VIX curve shows market already prices in election risk and more. Our take, political risks are notable. VIX curve shows that elections were not as feared in 2020 and 24 as 2026. That sounds like bullcrap. Even then, it's an uphill battle with midterms only won in 3 times by a controlling party since the Civil War. Yeah, so I mean, they'll lose in midterms. That's not a surprise. The odds that Democrats take control of the House are 76%. Both are at 37%. Bottom line, we see investor positioning into 2026 suggesting defensive posture for risk. Rotation out of tech and buying of utilities and healthcare. I do like healthcare exposure, but I don't like healthcare companies. Like, I think they'll be huge AI beneficiaries. It's one of my plays that I like in my top 10 stocks to buy. One of the plays is a company that benefits off of AI integration at healthcare companies. So, all this adds to the need for longer portfolio allocation, risk management, downside risk. Yeah. This is absolutely the key. The downside risk rests on the fact that a recession might not be avoidable by rate cuts and it's unpriced. 100% accurate. Market has zero recessionary pricing in it. So the fall will be hard and fast if we don't soft land. I mean, well, we've known that. VIX calls as a hedge. Higher liquidity with cash buffers. Yeah. Yeah, avoid large or reactive shifts in holdings. Mean reversion, sector rotation, quality versus low vol. Sizing risks. Bonds, fiscal stimulus, make bonds less obvious because of, you know, the potential for stimmy checks. Okay. All right. It's actually an interesting piece, honestly. I think they're not wrong here.
Poopy doopy.
All right, so what happened on the stonks? Yo, what the hell, dog? So far down 7%. This some bull crap. Alt 5's going bankrupt. What else? Q's still maintaining a little bit. Hood, Tesla Red, Pool, Dave & Buster's. Oh, Sim found floor. Look at that. Sim found a buyer. Almost lost 3K on Ethereum. Bitcoin lost 89. You know, I think what this might be is this might be a speed bump going into, yeah, didn't we do an analysis on Warby already? This might be a speed bump going into the Fed. Let me see here. Stonk. I don't know if we did. What's their ticker? Oh, no, maybe not. I'm pretty sure we did. It's just not in our tab yet. But anyway, well, maybe we'll do that in Course Live coming up. But, yeah, really what this probably is. Trump. Oh, Trump's yapping. Okay, well, whatever. All right. So, okay. Anyway, yeah, what this probably is just some, you know, hey, we had a good run since November 18th, you know, Fed meeting next week, a lot of catalysts coming up, little bit of a speed bump, huh? It's probably what we got here. All right, what else? Yeah, some profit taking. Yeah, I can't get my tab to load. Let's see here. Yeah, okay, known Cloudflare issue right now. Well, that's unfortunate. Okay. Wonder what the down detector says. Down detector. Down detector. Oh yeah, Cloudflare just had a spike. That's interesting. Microsoft Teams. Oh yeah. A lot of Cloudflare again, man. Well, hey, at least it isn't as bad as last time, says someone. This is why I don't like big network service providers, because when one goes down, they all go down. Blame the companies hosting them for not making backups. Lol. Down detector. Down. All right. Well. What else is going on? Let's see here. Power went out here 20 minutes ago. Are you near a Cloudflare server? SoftBank in talks to buy data center investor Digital Bridge. KKR to invest in assets of Brookfield's data centers. A lot of rearranging. Of money over here. Yeah. KKR is going to invest in data centers. Money's still flowing. Besson will take care of crime easily if it's a problem for FIFA. talking about we'll have to move it if we need to. Okay. All right. What else? Well, Bitcoin keeps falling. Somebody's selling the Bitcoins. Netflix lost this 102 line right here. Where is, yeah, SoFi dunking a bit. And then where are the Qs? And then BTC. Well, yeah, look at that. Who the hell's selling? Okay, so what do we have here? This was our liquidity piece. Let me see who else has a piece here. This was from BNY. They're the only ones talking about this. So let's look at the carry trade. JPY 10-year yield. Wow. Look at that spike just in the last few days. 1.95. Could be some carry trade. What's the time in Japan? Time in Japan. Oh, it's 1:40 a.m. Oh. USD to JPY. Off peak. Hasn't been dramatic yet. But remember, when this happened, if I go out to the issue over here, it's when the decline started and the USD to JPY went down 12.4%. Well, we really accumulated, or like we really maxed out around 9%. That's when you had the big shock day. That's when you had a really big VIX spike. We're only down about 1-ish% maybe from peak here. So, yeah, Bitcoin really, somebody really wants to sell Bitcoin right now. Look at that. Yo, who dumping? Okay, let's look at the 10-2. 10-2, oh, US yields are up as well. See, our 10-year is up, 4.135. That's probably a contribution here. 10-2, 58. So if we add to this higher 10-year yields, which may constrain the unlocking of real estate equity by people who might spend that equity on renovations, Buffett idea, or to buy stocks, buy stuff, or even stocks. Oh, Bitcoin. Let's unaverage this. Okay. Alt 5 is almost down 10%. Yeah, I mean, this is just such an obvious scam. I can't believe stuff like this is allowed to be listed. It's such a ripoff. Adobe's holding on to their gains today. Mostly. See if it can keep holding. And the Qs are trying to hold. And Tesla honestly being flat after its run up over 433 is pretty good. You know, you got to give it credit. It's pretty decent. Ethereum's about to lose 3,000. Let's see what the suits are saying. Okay. Besser reaffirmed commitment to engage with China. Okay, old news. All right, let's check here. Suits. The suits. The suits. Resilient consumer, rising yields combined, hurts, blah, blah, blah. What are the rate cut odds? Let's go to... Oh, let's see here. Okay. Rate cut odds. Okay. Oh, there we go. That's interesting. Why is that on? Huh. Oh. Interesting. Hello? Oh. I found my echo problem. Interesting. Ah, kill that. That explains it. Okay. That guy. And then, okay, rate cut odds, 95.2%. Global tide of optimism. What is this? Bond traders turn to supply for data out. What savings investment? Morning data sends mixed messages. Blah, blah, blah. No. All right, now I'm going to fix this. There we go. Oh, that's so much better. Okay. Yes. Success. All right. Progress. All right, cool. Now what? What's this?
Do this. This is the workforce that's coming. And I think robotics, drone manufacturing, chip manufacturing, pharmaceutical manufacturing, these are going to be the linchpin of American advanced manufacturing going forward.
Joining us this morning, Robert Plater, CEO of robotics company Boston Dynamics, is with us. Robert, it's great to have you. Thanks for the time today.
Thanks for having me.
Our viewers probably familiar with your work, at least visually, but I wonder, do you think we're at an inflection point either on innovation or policy support when it comes to this theme?
Both, I think. So we've been working with Secretary Lutnick to talk about a national robotics strategy. We think there's an opportunity to level the playing field in manufacturing. You know, right now the Asian countries have a benefit in terms of low-cost manufacturing and labor, and we can level the playing field by using robotics to help
I don't think we can
increase
at
the
all.
productivity.
China is eating our lunch in manufacturing. That's a joke. Total bullcrap.
You know, in getting the choice and the flexibility to build these data centers the right way. And that's why, you know, we at HP now, with the addition of Juniper, we are becoming a networking center company. And this past week, just in Barcelona, I came back yesterday, we announced a number of amazing technologies that allows customers to adopt, whether it's NVIDIA or whether it is AMD. And we announced the first scale-up Helios switch that allows them to adopt this technology. So it can be a combination of things, depending on where they are in that build-out cycle.
Our Bloomberg Intelligence analyst, Woo Jin Ho, always loving the diversification of the business and the leaning into the networking, Antonio. But just going back to with the data centers and the margins, that's always been the question. Like AI servers, the cost is memory. You seem pretty confident. Why are you confident on just having the handle on the shortage that we've got?
All right. Somebody says echoes back? Really? That's annoying. There. Oh. It's like in the background a little bit, huh? Oh, that's bizarre. That certainly would have killed the echo, but... Wow. I don't know where that's coming from. That's what's annoying. Oh, here we go. It's this button. We're gonna fix it. We're gonna fix it. basically want to. There we go. Okay, perfect. That should solve it. Okay, what a pain in the butt. Okay, so let's go see what else is going on. So far, not much, honestly. It's pretty quiet. Netflix. Ooh, the information doesn't love this. Netflix proposed acquisition of Warner Brothers. They're paying a huge price, 27 times next year's expected profits, well above prevailing multiples. Business likely won't add many subscribers. Regulatory obstacles. Wow, here's somebody who really doesn't like the deal. Antitrust hurdles loom. Even if Netflix gets approval, it would have to take on $50 billion in debt. That's true. Including cable channels, which generate most of the company's profits. But Netflix isn't buying those. The cable channels. In the first 9 months of the year, Warner Brothers studio and streaming operations generated $2.3 billion of EBIT. Next year, they expect the business to generate $3 billion. After taking into account the cost savings, Netflix expects a multiple of 14. Blah, blah, blah. Company's okay. Conference Netflix executives tried to address. Deal provides a greater choice. Fine. Customers, blah, blah, blah. Biggest benefit is expanding its positioning in the streaming ad market. Well, that's exactly what I was looking at. Netflix launched Space, a low-price tier carrying ads several years ago, but its space-based ad business has grown slowly since. It's still an insignificant portion of their revenue. This is true. Other benefit is defensive, make sure nobody else gets the asset. There's always a risk that, you overpay because you don't want somebody else to have the deal. All right. Let's see what we have. Okay, a little bit of a rebound on Bitcoin. Selling might be done. Yeah, Q's popping up again. Tesla gained the lead. That's nice. Somebody said, I'm going to assume the information did better DD than, or Netflix did better DD than the information. Yeah. Yeah, probably. Okay. I'm saying Silver Cycle could very well be a black swan. Oh, well, sure. Yeah, because of the it's the same thing with gold. They run up, oftentimes going into shock periods. It's just like the 10-2 being above 50. That's why I've always been saying, minimize debt right now. Don't go into debt to go buy stocks at high valuations. I think you can choose. I think there are stocks you can choose that'll do well. They always trash Hastings. Yeah, some of trashing Hastings comes from his support for Newsom as well, I suspect. I'm not the biggest fan of Hastings plowing money into Newsom myself. Okay. There's nothing really new. Pretty dang quiet right now. So, the most interesting piece is this guy saying, 2026, save money for 2026. But beyond that, that's not a surprise. So. Up again. Oh, there we go. Somehow managed to hit that button. All right. So, yeah, I think that's all I got. So we'll catch up in a different one. So good luck out there. Have a happy Friday. I love y'all. Check out our AI and consider investing in HouseHack. But make sure to read the offering circular first at househack.com or reinvest.com. It's the same company. But I think for an app name, Reinvest is pretty